Welcome to FinFlix, the one-stop for all things finance simplified. Today is June 19th, 2025. From the trading floors of Dalal Street to the policy corridors of the U.S. Federal Reserve, we've got a whirlwind of financial updates that could affect your investments, your savings, and the global economy at large. Stay with us as we decode market moves, investor sentiment, central bank strategy, and a developing aviation tragedy that's making global headlines. Let's start with the Indian stock market, because if you looked at the indices this morning, you might have seen a sea of red. Sensex dropped over 100 points in early trade. Nifty slipped below the psychological level of 20,4,800. This is the third straight session of weakness, and today's sell-off was largely led by IT stocks and banking heavyweights. But why are investors selling? One word: the Fed. We'll get into that soon. But first, let's understand the domestic mood. The IT sector is under pressure as global growth projections remain soft. Infosys, Wipro, and TCS saw selling pressure as global clients cut down outsourcing budgets in light of recession fears in Europe and stagnant growth in North America. Meanwhile, banking stocks, especially private lenders, have seen profit booking after a strong rally in the past month post the general elections in India. Many institutional investors are now trimming positions as the market waits for the new government's first budget in July. HDFC Bank, ICICI Bank, and Kotak Mahindra Bank all saw intraday dips between 0.5% and 1.5%. So what's the sentiment? Weak global cues, cautious Fed language, and some profit-taking on domestic grounds. If you're a trader, it's time to stay alert. If you're a long-term investor, this might be your opportunity to accumulate on dips. Even in a red market, there's always opportunity. Today, the Economic Times highlighted 8 stock trading ideas for short-term gains. Here's the lineup. BPCL, bullish signals due to strong crude processing margins. Maruti Suzuki, strong May sales and positive rural demand trends. D-Mart retail segment shows resilience as consumption picks up post-election. Eicher Motors, investor confidence boosted by export growth in Royal Enfield. Astral Ltd, technical breakout pattern seen on the daily chart. Amber Enterprises, rising demand for AC components amid hot summer. Ziant, mid-cap IT with strong order books. RBL Bank, short-term momentum based on volume spikes. These aren't long-term blue-chip picks. These are for nimble traders looking at short-term price action. But remember, set your stop losses. Volatility is still high. Now let's fly across the ocean to the United States. The big headline from the Wall Street Journal today: the Fed waits out the tariff economy. What does that mean? Well, over the last few months, the U.S. government has imposed new tariffs, especially on Chinese electric vehicles, solar panels, and semiconductors. These tariffs are meant to protect American industry, but they come at a price: inflation. Fed Chair Jerome Powell addressed this in a much-anticipated press conference. He said, and I quote, "We are navigating a complex environment. Inflation expectations remain anchored, but we are closely watching the second-order effects of these tariffs." Translation: the Fed is not cutting interest rates anytime soon. The U.S. federal funds rate stays in the 5.25% to 5% range, the highest it's been in over 2 decades. Powell made it clear, until core inflation cools off and wage pressures ease, the Fed will wait and watch. What does this mean for global markets? Emerging markets, like India, feel the heat. Why? Because higher U.S. rates attract foreign capital out of India and into the U.S. Dollar strengthens. Import bills rise for countries like India. Equity markets react with caution, especially rate-sensitive sectors like banking, real estate, and technology. Quick calendar update. Today, U.S. stock and bond markets are closed for the Juneteenth holiday. It's a federal holiday commemorating the end of slavery in the U.S., and it means Wall Street will resume trading tomorrow. For Indian investors, this also means reduced foreign trading activity, which could explain some of the thin volumes seen on the NSE and BSE today. And now for a deeply tragic story with global attention. An Air India Dreamliner operating the Delhi-Newark route crashed shortly after takeoff 2 days ago. Reports confirm the deaths of 241 passengers and 30 people on the ground. Investigators have recovered the black box, but the damage is extensive. As per the Economic Times, India will send the flight recorder to the United States' NTSB, the National Transportation Safety Board, for forensic analysis. This is standard procedure when local labs lack the necessary equipment or when the manufacturer is US-based. This tragedy not only raises questions about airline safety and maintenance standards, but it could also lead to diplomatic coordination and aviation policy reviews. Air India has grounded its remaining Dreamliner fleet pending internal checks. The aviation industry, still recovering from the pandemic, now faces renewed scrutiny. So let's bring it all together. Indian markets are cautious. Traders are selling high beta stocks. US. Fed is on hold. No rate cuts in sight. Dollar remains strong. Gold prices up. Aviation sector might face short-term pressure. What should you do as an investor? Diversify. Don't rely on just one sector or region. Look for value in corrections. Maruti, BPCL, and select IT stocks could be worth watching. Stay updated with central bank policy. The Fed might not move in July, but the ECB or RBI could surprise. Be cautious of global risk. From tariffs to geopolitics, every factor matters in today's interconnected world. And don't forget, the budget is coming soon in India. That's when we'll know where the government stands on capital gains tax, disinvestment, and infrastructure push. You guys asked some great questions this week on Instagram, so here's a rapid-fire FinFlix QA. That's all for today's FinFlix deep dive. Markets don't sleep, and neither does financial news. From headlines that shake economies to numbers that shape your wealth, we're here to break it down for you. Like, share, and follow FinFlix for more finance made simple. Subscribe for daily news bites, stock ideas, and economic trends. And don't forget to save this episode if you want to revisit the key takeaways. Until next time, invest smart, stay curious, and keep watching FinFlix.